4th November, Friday, MAO with Cal. Oh dear, retail investors are buying more stocks. Exactly. I mean, for some reason, I know that the market has rebounded more than 10% from the bottom, is exactly what Mike Wilson says. But the problem is that is what the scary part is, because he says that the market will rebound 10%, and the market really did. So at this junction now, if you're going to buy into the market, you're going to buy near the high. And I've been telling people that be careful of the MA200, and undeniable things really happen. This is getting scary. And of course now, if retailers are buying the stocks, what do you think the big boys will be doing? Your guess is as good as mine, alright? So that is the reason why you need to be very careful, because if not, it's alright, you get into serious trouble. So do your risk assessment, and thank you Ames for the kind sponsorship. Now, the thing is this. If you didn't know, let me share with you now. The 10-year yields and minus the 2-year yield now, the inversion has gone really crazy. It has went down to 1980 low. My goodness. Now let's flash back again, okay? So we go back all the way back here itself in 1989 to 1990. You can see that the 10-year yield and the 2-year yield inverted, okay? And then after that, within about 1.5 years later, we have the recession, okay? This is very critical information that you must take note, okay? So recession came in after that, okay? So the big recession number. Then after that, we have a very big bull run on the market. The stock market was brilliant. Bill Clinton time. Everybody was happy. Then after that, we have another inversion again back in year 2000. And after that, about less than about 1.5 years later, we have another recession, okay? And that was where the low for 1.5 years until 2004 to 5, where the market once again hit a start of the bull market. Now, if you notice this, that was exactly the time whereby the 10-year yield and the 2-year start to come off, right? So that is the very clear of the sign of the big bull market. Okay, so after that, in 2006 to 2007, we have another inversion, as you can see over here, and again, same thing. About 1.5 years later, we have the next recession. Oh gosh. And incredible, if you look at it, the chart carefully, it was only about 2013, right? That was where the market started to really bottom out, and of course the stock market went all the way from like 26,000 all the way to 36,000. So you notice that this is a regular pattern that's been occurring every single time without fail. So it was noted back in 2019 where there was a slight inversion, a very slight one, and a lot of people saying that, hey, this is not going to be a big problem, it's just a touch and go. But if you believe in history and you notice that, that's how long, right? So 1.5 years later, which is exactly about the time, we have the pandemic. Oh my god. And because we pump in more than $5 trillion into the market, as in Federal Reserve, so all the central banks around the whole world, so we have the fastest recession ever, okay? Okay, so I think I heard this thousands of times, but now I want to share this with you guys. We are now at the lowest level since 1980. So it's even lower than back to 1989 low. It's lower than this 2000 low, definitely lower than this 2007 low, and of course the 2019 low. So which means that we are now at the worst time ever, and probably recession is coming near. So if you look back at the tape itself, right, we have the first inversion back in about year 2022, right? So if we look at 1.5 years, so it's probably by next year we're going to see the big R. That's the reason why you need to be very careful. And of course now, if you notice this, more people are using their CPF money in Singapore to buy treasury bills because the interest rates are going up. So it's again telling you a foretelling sign that people are getting a bit worried about the stock market. And that is why I'm quite surprised to see more people are buying stocks. That is really ridiculous. Alright, so let's look at this one here itself. Let me just do a bit of PowerPoint. Okay. Changes around. Okay, now this is the market yield on US Treasury securities at 30 years constant maturity, quoted investment basis, inflation index. Okay, simply put itself, right, this is the TIPS indicator. Okay, so you notice that right now we are at definitely higher than the 2019 level, okay, much higher, and we are now back to 2014 level. Now you look at it carefully with more detail, you will notice that this particular Treasury Inflation Protection Security, aka TIPS, right, is actually indexed to inflation in order to protect the investors from a decline in purchasing power of their money. So as this number climbs higher, that means that the buying power itself, right, has technically reduced in a way, and that the cost is actually increasing. Okay, that is not a good sign, because inflation usually will bring these tips higher, and this is why you need to be very worried right now. But the problem is this: as all these things happening right now, right, we notice that more people are buying into the stocks, especially US stocks, the technology stocks. So although the earnings has disappointed quite a fair bit, but you can see that stocks are still going up. But the interesting part is that people are buying, but the stock itself, the price is going down. That is where it gets very scary. And I'll share with you more. So we have the data to support. We won't be like claiming things without giving you data. So this is from Vanda Research. Okay, Vanda Research is a pretty good site. You need to pay money for it to get these numbers. So apparently they have noticed that the inflows onto the FANG counters is close to $300 million per day. All right, and this is the same in line at what happened back in 2020. So of course, some people say, hey, remember Cal, at 2020, the market was bullish. I understand that. But the thing is this, right now, we have a different scenario. In 2020, we had the Federal Reserve pumping so much money into the system. They are doing QE, all right, quantitative easing. But now in 2022, they're doing quantitative tightening, and they're increasing interest rate. Back then itself, the interest rates are actually at the very low end. And the time inflation itself is less than 2%, or probably 2%, but today it's official at 8.3%. So this is very, very different. So apparently now, we have the same amount of investors jumping in to buy in the market, and they are really expecting the stock market to go higher for this counter. But I really have my own view on this, and I am pretty skeptical. Why is that so? Let me share with you this now. Apple is now valued more than Alphabet, Amazon, and Meta combined. Now, of course, from this point, if this was showed in 2020, it's going to be very bullish for Apple, because that's good, right? Because that means that Apple is running in $1 trillion club. But the problem is, it's not because they are better, but because Alphabet, Amazon, and Meta, their market share came off. So that is the main reason, all right? So we all know that, right, this big tech stock suffered a very brutal sell-off last week, and definitely itself, right, this is not good. Now, we also know that Apple is the only counter that beats its peers by beating the Wall Street revenue and profit forecast. But the question is this, okay? Now, think about this. So by right, Apple should be doing okay, right? Should be okay, right? Right? The share price went up. After the result, right, the share price went up by 8%. When you notice that Meta, Amazon, Alphabet all lost between 5 to 20%, okay? This one, take note, yeah? It's very critical information coming up. But you notice that now that something has happened to Apple share, I'll share with you very shortly. Now look at Tesla first, because these are the few counters that everybody is focusing. Now look at Tesla. Now Tesla tried to recover around this area recently. Let me just change my color for a short moment. Okay, the Tesla share came down to 206. All right, this is the level that I mentioned to you that is very critical, and the market really rebounded. And I told you that 237 is a very critical number, which the market has to stay supported. Apology on my handwriting. Right, indeed, the market really hit 237 and stopped there. Okay, so now the thing is this: if the market cannot stay above 237, then it will come back down to 206 again. But if you are to ask me, I believe that it's going to come down more to $188, and this will definitely freak out one of them, definitely Cathy Wood, because she has a lot of Tesla, 10% of portfolio. So from the current price right now to 188, there's going to be another 10% drop, and that will definitely rock the entire technology industry. Now, why do I say that? Because if you look carefully now on Netflix, which is another heavily bought stocks, you notice that Netflix went up recently because of the subscriber increase to 2.3 million. But like I say, the thing is this: the subscriber may increase, but it doesn't mean that the company will do that well. So you can see right now the volume did not accompany the upside. Actually, I've been warning people that when stocks goes up but the volume doesn't accompany, that's never a good sign. And truth be told, right now we are now very near at the 200-day MA. Now, if the market loses the 200-day MA, I believe that this counter will go down all the way to 250, and that will be the very important support, because that is the gap. Okay, that was a gap. If the 250 fail to stay, oh gosh, this is going to be bad. It's going to be 212. And this will again restart the bear selling on this counter once again. So we have Tesla not doing well, Netflix not doing well. These are the top few companies that the retail are buying. Watch this. a lot of people are still buying Meta because recently you can see Meta share have came down quite a fair bit, right? But you know the volume also went up a fair bit. But that is because there was an earning time. But you look carefully this chart right now. Oh gosh, this chart is now the level of low is going back all the way to 2019. Okay, that means that whatever have happened the last 3 years, it doesn't really have done much. And if you look back again, you cross back again, that was a time back in 2017 where the market was very bullish. So if the Meta share really continue to go lower, this is going to be very bad news. Okay, going to be very bad news on this case right now. So now the thing is this, Meta share has now dropped all the way to this point here itself. That is the point that, you know, because of the earnings and the thing outcome, right? So now this is worse. This is like $88 right now. And I told you guys that I believe that Meta share will come down below $100 when it was trading at 137. Remember? Yeah, that was what I shared with you back then. I told you that it will go below 100. And that's the reason why I move away. So the thing is this, guys. If this is to continue, because in $88 is all the way back to 2016 level. The last time we see something lower than that, which is a very strong support, is at $72. Oh gosh. So imagine if Meta go down to $72, which is very, very, very possible because of the entire market, right? Then of course it's going to freak out more people, and more people will get out from it, and they may diversify to another platform. So that is another reason why I am very concerned. So now think about this. The people, the investors are buying into Tesla, they are buying into this Netflix, they are buying into this Meta, and look at the share price, look at the movement, it's terrible, right? So you may think then let's just focus on Apple, right? Okay, so that is where it gets very, very scary. Now watch it, guys. Now the thing is this, okay? This is Apple share, okay? This is Apple share that went up all the way to about $156, which I told you guys that about 150 will be the phase resistance. So we go to about 156, right? Some people will say laughing and say that, Cal, you got it wrong. I say, never mind, we watch the thing. So apparently when you reach 156 and pull back below the MA200, straight away I know that something is very wrong. And then I start to tell people that, look, the next support level is 147. You cannot lose this 147. If 1747 breaks, it will go down all the way to 138. And I think that probably tonight I may get it spot on. So now the thing is this, look at it right now. Apple, the next support is at 133, and the next one in terms of technical will be 129. And these are all the near-term level. Now think about this. Apple shares are coming down. Why? I mean, the earnings was good, right? So, I mean, if the rest of them are not doing well, then why is it coming down? And the way it came off is very funny because it's like very fast. Yesterday alone itself, it down by this 6%. A single day down, down by 4%, my bad. $6 by 4%. That is quite a fair bit. It's a gap down, in fact. Okay, so there was some news on it itself, right? We all know that there are some rumors ongoing now that is like, you know, telling that Apple is going to reduce or doing a hiring freeze. Okay, now of course Tim Cook really didn't want to say it. He didn't deny it, but he didn't confirm it. But people are watching it very closely, and of course we know what happened recently in China. So this is not good sign. Okay, so imagine if Apple is doing a hiring freeze, what do you expect for the rest of the companies? It would be worse. Okay, so probably that's what Jerome Powell wants to lower down the employment numbers. Okay. But you can see right now, right? Okay, because Apple have been spending a lot of money buying back their shares, so that's why we saw the share price really went all the way up the stock. Can you see that? Yep, indeed. But when you use so much money, your cash flow to go and buy your stocks, right? It is good for your shareholders, but no, it will be bad if the company cannot continue. So now the thing is this: apparently, based on the Apple net cash flow, okay, they are back to the time in 2010, 2010 level. Oh my gosh, that means that the amount of the money that they had in cash is now greatly reduced until back to 2010 level. So think about this, okay? This is not a good sign. This is really not a good sign, all right? Imagine if, let's say, the buying itself, if they stop internal buying and the share price coming down in this manner, that means that there will be more downside to go. And if Apple is going down, what do you expect, correct or not? So Apple dodged the tech rout last week, but now it's coming down in such a fashion itself. What do you think will happen for the rest of the market next week? This is where I get very, very concerned about. So if you look carefully now on Apple versus the NASDAQ index, you will notice that the incredible what they call comparison of how it works, because Apple itself is a kingpin stock, okay, kingpin stock. So you can notice that whenever Apple picks, that was where the NASDAQ picks. So it's almost inevitable that if, let's say now, if Apple is going down like this sort of place and goes down lower, then of course the NASDAQ has more downside to go, and of course it will carry the repercussion to across the board. The sentiment will be bad, and that's the reason why I felt that the NASDAQ can still go down. In fact, yesterday I already tell you guys I believe that the NASDAQ can go below the 10,000 mark. Remember, I said that 10,000 mark, right? I think that it will go down below the 10,000 mark for the NASDAQ, okay? So that is why I'm very, very worried for the current situation now for people, the retailers who went in to buy. If they were to start to have margin calls on them, it'll be about 10 to 15% from the recent high, and we can roughly gauge from there. So what's the main reason? Because you don't fight the Federal Reserve, okay? If you notice this, yes, last week we have the biggest. Okay, hold on, I'm trying to get my mouse here. Oh, okay, there we go. All right. Okay, this is the Fed Fund balance sheet. I noticed that yesterday, as of yesterday, okay, the Fed was updated yesterday. The Fed Fund has reduced, one of the biggest reduction for their balance sheet. Now, this is really clear. I mean, the Federal Reserve is not going to care the BS from the Wall Street. Wall Street is telling the Federal Reserve to do, stop raising interest rate. But Federal Reserve said, nope, I continue to do what I need to do. And they really did. They actually reduced more, and now we have a big thing to watch out for. Yesterday, they just dropped $33 billion from the balance sheet. So this is one of the biggest, and that shows that Federal Reserve is going to care about what's going to happen. So think about this. What if the people realize that, oh dear, Federal Reserve is really serious. They're going to increase interest rate. They're going to reduce balance sheet. And we all know that the recent rally from the market itself is almost directly linked to the Federal Reserve. There will be panic coming in, okay? So that is the reason why I felt that the retailers who are jumping in right now, they got their whole thing wrong, okay? And that's why we have been saying this, don't fight the Federal Reserve. We already said this many times, and history has proven that fighting the Federal Reserve will not bring you any better. It could bring you into a worse shape. So that's the reason why I'm telling you guys, go slow and be very careful, especially we go into next week, okay? All right, so with all this information right now, let's look at the charts so that we can see something clearer. But before that, I want to share with you something for tonight. Now, tonight is the US the NFP figures. Okay, so let's go back to the ADP. The ADP month was 192,000 and the market forecast 195. But incredibly, the ADP numbers on the public sector came out 239. So that is a jump, and that is not what the Federal Reserve want. Okay, now yesterday the initial jobless claim, the forecast, the previous month was 218, the forecast was 220, the market came out slightly lower. That means that the mean increase. Now we have two, ADP and initial jobless claim is not helping. Now tonight is the thing, the non-farm payroll. It was 263 last month. Okay, the forecast incredibly is look at 200. I don't know how they reduced 63,000 from the market, but let's take a look. So my point is this: if the numbers comes up 220 to 240, then most likely the market won't like it, because that means that the Federal Reserve didn't get what they want. They want the numbers to go down. So okay, they want the numbers go down. So you can see over here, you can see that the numbers have been coming down nicely, but it's still higher than 200,000. So if the number go past above it, this is going to freak out the market. Okay, so this is something that you really need to take note. Yep. And of course, if you look carefully now on the market, you can see at the moment now the 10-year yield is really moving very, very nicely. So as a 10-year yield is moving up, the NASDAQ, you can see the NASDAQ is coming down. So you can see that if the yield higher to 4.2 or 4.3, that will definitely push the NASDAQ even lower, and that will send more technology stocks into selling pressure. And of course, if you look at the dollar right now, the dollar is now pulling back a little bit, but we've seen this many times before. The dollar during the daytime in Asian time, and then during US timing, they up again. It happened yesterday, it did the same thing again. So what do you think? I believe that it will happen, because if the NFP numbers are good tonight, then it will push back the dollar higher, and that will give extra push to the yields, and of course it will spread across the board and get into the stock market to come off a bit. Yep. Okay, so now the thing is this, as we're looking right now, this is the Dow Jones chart. Now we can see from the Dow Jones chart right now, everybody take a look. Now this is the 90% at 33,258. This is 85%, 31,411. This is the middle mark. And you notice that every time the market break the middle mark, once it there'll be some selling. So we are seeing the same thing right now. It puts up some profit taking right now. So as long as the market stays above OP, no problem. You can still expect it to go back to 32,334. But if you ask me, this is if you look at the trend line that I had drawn from the highest point connected to here to extended over here, and then you can see a very clear inversion. And of course, we have the most recent break and pullback. So if the market later on goes below the opening price of the day, there is a chance for the market to come back down to 31,411. Now at the moment now we can see that there's some buying on the gold market. It's because the dollar is actually coming off. But like I said again, we've seen this on Wednesday, we've seen it on Thursday. In the Asia time, we see the dollar pulling down, and during the US time, the dollar pulling up. So I suspect that this is actually the thing going right now. Now China 850 today rally time. All right, not too sure what's the reason, but I'm quite sure the plunge protection team is definitely in, because the Hong Kong market also did the same thing, and now with the futures is higher now for the US market, most likely we'll see more upside. Yep. Okay. Now for today, let's look through the whole TWV chart before we end the session. You can see right now the BMB that I have now, the RL and the SL is there. So as long as the market stays below the BMB SL level, there's a good chance to see 31,135. Now at the moment, my KSI is still showing the boys are buying, which is reflective enough, but my KRW, which is showing the weightage, is not there. So at the moment now, there's still kind of mixed signals, so still not so bad. But if the market, once you realize this, once the KSI from this green turns red, KRW also turn red, then the selling will be massive. The selling will be massive. Okay, so traders, you need to watch out for this. Okay. Now for the NASDAQ, as I said, we have seen the market break below my BMB minus 1 time 1, and now it's trying to fight back all the way to the ML 10,800. Now like I say, as long as the dollar is still coming down at the moment, no problem. But once the dollar recover later today, if let's say I'm right, then the NASDAQ will pull back, and I believe that it will bring down all the way to 10,384 series. Okay, so watch out for resistance at 10,800 on the NASDAQ. S&P 500 is today trading at now it's trading at 37.29, and we have the strong KCB at 36.67. Same thing. If the NASDAQ, the S&P will pull back. The upside is 37.48 right now. There's a MA 200. MA 30, sorry, and it's the same level as my pivot 1. So 37.48 and 37.50, there's a stack right now. This could be the target if the market continue to push it higher. All right. And of course, people have been asking about Nikkei. I've been telling you guys, Nikkei will likely be sideways at the moment because the dollar is still not really firming its base right now. But once the dollar firms its base, then the yen will be pulled down. The yen will basically weaken, and we can see the Nikkei may test about 20. It may test around this 27,700 series level. But again, as I mentioned to you guys, if the NASDAQ comes off heavily, things can get very bad. Okay. All right. I'm having a bit of a connection issue. Also, apology on this. Okay. Then we have the crude oil market. Now, crude oil market has been sideways, and this is really not a good sign, because you can see right now my boys indicator are showing a lot of buying, and the KRW also buying. That means that we are going to see some form of push up very soon. Now, of course, I've been saying that crude oil and Dow Jones has a very interesting relationship, but you notice that they don't really right now. So now what happened is this, guys. If the crude oil is going higher and the Dow Jones is not doing that, that is an inflation sign. And of course, as I mentioned, if the crude oil shoots up and goes up to the 92 region, which is expected over here, then definitely there'll be more panic across the board. That means that whatever Biden is doing, whatever the market is trying to do to curb inflation, is not going to help. Yes, and if you ask me seriously, I believe that crude oil is going to go to $92. Yes, if you ask me, because the way it is performing around my BNB RL level and the way it got supported over here, this is a very classic sign of a pump up very, very soon. So this is where it get very, very concerning right now. Okay, now for gold market, this is scary, guys. Gold market here is telling me that it's trying to push up again because of the dollar that is now weakening. But if it's going to pull back down, 1604 will be next, because you can see the boys are selling. My KCX is also lengthened blue. So these are all not a good sign. Now, why is it doing right now? Because the dollar is coming down. So that's why the gold is the initial reaction. But like I say, watch out for the NNP. I think that will turn around the whole thing. Now for silver, you can see that it's testing $19.77 several times. Okay. Now the $20 marker is here. So if the market breaks above $20 and stay above, the next target is 2031, and of course $21 will be my target for the end of the year. Now silver and gold got a bit different because people are now cornering silver, in my opinion. So that's why I can see that despite the gold prices came up a fair bit, every time when the silver price comes down, the buyers comes in. So that is how I see this whole thing right now. All right. And last but not least, always favorite, guys, Bitcoin. Now the question is, Bitcoin is still now sideways, and apparently if let's say tonight, if the dollar had to weaken again, strengthen again, sorry, my bad, then the Bitcoin may put down to 19,300 series. Okay, at the moment now, the boys are selling, the weightage is different, so we have a sideways momentum at this moment. Okay, and last but not least, sorry, my bad, is Ethereum. Ethereum is now coming off a little bit. Same thing, guys. If it loses the BNB SL, 1381 could be next. Now watch out for tonight's NFP figures, guys. It's going to be 8:30 p.m. Singapore time. And of course, don't forget, today's Friday, I left a code on a PowerPoint. Search for it, key in the comment box, and tomorrow on Saturday I will do the spin. All right, this is Kel signing off. Have a great day. See you next Monday. Bye bye.